Oh man, I got some stuff I got to get off my chest in this video here today. Oh boy, do I have some stuff to get off my chest, okay? It's interesting. So it's so fun when you've been doing this for so long to see the cycles go in the stock market and the vibes of the market change and the thought process change in the market and the consensus on what is good and what is bad in the stock market change, right? And so if we go back to a year ago, right? Let's say we go back to January and February of 2021, for instance, right? Very, very speculative time in the market. It was the meme stocks were the hot ones, right? The crazier the business model, the more outlandish the company, like the better the stocks did. And that came crumbling down very quickly. That was the closest time period we had to the pretty much, I don't want to call it the Great Recession, because the Great Recession was a whole different deal. That was the closest time period to me we've had since the tech bubble, essentially, where companies just, were trading at insane valuations. Everything was going crazy. The hype cycle was on and all those sorts of things, right? The Great Recession, that was a totally different deal because that was a fundamental deterioration in the entire financial system. You had investment banks going down. You had nearly the entire financial system going down, followed by a massive recession. So what we had happen here recently, that is very, very different than 08, 09. This was much more akin to essentially what happened in the tech bubble, right? Not to quite that epic level, but man, we were pretty darn close, okay? So you had that happen, right? Now, what has happened since then? Well, all those meme stocks are gone pretty much now. Some of them are still listed and things like that, and that's fine. But a lot of those stocks have been absolutely decimated. Growth stocks have been absolutely decimated. Anything that is seen as a riskier play on even unprofitable companies, even if they're not losing a ton of money, but they're unprofitable, right? Those stocks have been destroyed. Even if they have great long-term futures and visions for the companies, those stocks have been destroyed, right? So you're looking at countless stocks in the market. I believe, even recently, the Russell hit bear market recently, right? Not only that, but recently we had the most stocks trading 50% plus down from 52-week highs in the stock market history, right? So it got ugly out there. Now, when you're in one of these sorts of time periods where stocks have been devastated, right, and beaten down, you have a couple things happen in the market, okay? One of these groups I'm not even going to really address in this video. The other group I do want to address because it's funny to watch this play out, okay? The first thing you're going to have is you're going to have folks saying, see, this is why you need to start shorting stocks. This is why you need to start buying put options, things like that. I'm not even going to address that group in this particular video, right? You got to understand, when it comes to shorting, you're taking literally unlimited risk. When it comes to put options, you're buying put options straight up, and those, the market flips, all of a sudden you're done in those. You're devastated, right? And you lose 100% of your money. So I'm not even going to address that group. That's a whole different group, right? But we have another group that starts to pop out of the bushes in these sorts of markets when stocks are being devastated left and right. And you know who it is? It's the index fund crowd. See, you idiot, you don't know how to pick your own stocks. This is why you just put your money in an index fund, and you're going to be fed that time and time again. This is why you put your money in an index fund, and you're going to hear it from Wall Street. You're going to hear it from the investment banks. You're not smart enough to control your own money. This is constantly fed out there. Let a professional take it from here, right? Let an index fund, take it from here. Get their cut of that, or let a professional take their cut of this, right? Because you can't do it yourself, and you hear this fed out there constantly. It kind of reminds me of I didn't grow up like this, but there's some kids that grow up and they essentially have parents that make them have to do something, right? Like, you're going to be a doctor. You don't have a choice, or you're going to be a lawyer, or you're going to this college and things like that, right? And so some parents really try to dictate exactly what their children are going to do, right? And you have the same thing happen as a society, where society tries to funnel you through this funnel of like, go to college, take your money, put it in an index fund, and live your life and watch Netflix and stuff like that, right? And rather than invest your own money and take that money into your own hands and say, you know what? Rather than just throw it off and put in whatever stocks, right? I would rather pick my own stocks, and I would rather pick this stock and pick this stock, right? If my children came to me and they said, hey, Dad, I don't want to do what you do. I don't want to listen to conference calls. I don't want to read annual reports. I don't want to do any research on stocks, but I want to go up with the stock market over time. Cool. Index fund. Next best thing for you, right? But for myself and a massive amount of people, like pretty much everybody that watches my channel, we don't prescribe to that notion. We're doing our own thing. We're going to pick our own stocks, okay? And we're going to try our best at that game. And whether we outperform the market or underperform the market, we love to do what we love to do, right? And we don't just like to be in this like zombie mindset of like, get a decent job, put your money in an index fund, or give it to somebody on Wall Street because, we don't know how to do it. At the end of the day, we love to do this. But when your times get tough, when the market gets tough, you're going to be constantly fed this it can be from the internet, right? It can be from, friends, family members, people like that. You should be buying index funds. What are you doing messing around with this stock? Imagine there's this guy over here, right? Let's call him Christopher. Okay, Christopher buys Netflix stock last week for, a few weeks ago for $500 a share. Netflix crashes. Next thing you know, it's $390. He just lost a ton of money, right? You have the index fund crowd come out and say, man, see, you idiot. That's why you should have just put in an index fund. That's why you should have a professional managing your money because you don't know what to do, right? And whenever it goes wrong, they're right there to point the finger at you and tell you how much of an idiot you are. You don't know what you're doing. You're clueless and all those sorts of things. You have to listen to this time and time again, right? And you can choose to believe it, right? Or you can choose to say, you know what? I like what I do. I'm a believer in what I do. I'm a believer in controlling my own money and where I put my own money. I'm not a zombie. I'm not like, I don't know what to do. Take my money. I don't know what to do. Like at the end of the day, if we go ahead and I pulled up the public account, right? So public account, I've gotten decimated with a lot of stocks, just as pretty much, I would say most folks have, right? I've been just decimated. Avant down 54%, Corsair down 34%. If we look at Honest, down 21%, Tattoo Chef down 27%, Voyager down 42%. I've been destroyed. Okay. Never mind that. A lot of my stocks that, are a little older position because those are just the ones I've been buying for the last, 6-9 months or so, right? Never mind that. I've lost a ton of gains on a lot of stocks, right? Tesla has lost like $400 a share from its 52-week high, roughly, right? So my gain's not nearly what it used to be. Skyworks Solutions, same exact thing. My gain's not nearly what it used to be. Revolve, my gain's not nearly what it used to be. Revolve peaked out, way above $59. I can tell you that, right? The Planet, that one's been devastated, right? Meta, we saw what happened with Meta recently. That stock's absolutely destroyed. It's trading as cheap as PE in the company's history and by a mile right now, right? And, look at this. I mean, stock after stock I've been devastated on, but I'm not going to be like, oh gosh, I got to go pick index funds now because this is the same thing I have to go through every single time I have a new group of stocks and they do bad in the short term. It happened with Tesla. It happened with Elf. It happened with Revolve. Tesla was the biggest case of this at the end of the day. Tesla, when I was buying that stock didn't do a thing for the first year, and a lot of times it downtrended. And I had to listen to a lot of people laugh at me and tell me, oh, you're such an idiot. You should have just put your money in an index fund or put your money in Apple stock or whatever, right? And you have to listen to that trash constantly. And for me, being on YouTube, that's the price I sign up for, right? Of being a big person on the internet, right? And so I have to listen to that all the time. Every time one of my stocks does bad, oh, you're an idiot. You're bad at picking stocks. You're washed up. You can't do it anymore. Put your money in an index fund. But the problem is other people have to listen to this garbage as well. And they're like, I did do bad on stocks for the past year. So you know what? You're right. Let me put my money in an index fund. If you love to do this, there's a high probability you'll make money if you're doing the research work and you're staying with the fundamentals over time, right? If I look at a public account over the past 3 years, we outperformed 2 years massively and we underperformed last year. Last year, this is calculated by Fidelity Investments, by the way, not calculated by me. Investment rate of return was about 15%. So we got outperformed by the S&P 500 last year. We got beat. Okay, cool. I would still rather be a stock picker and get beat by the S&P 500 than invest in index funds. I would rather do that because I actually enjoy this. I actually like listening to earnings calls. I like to actually, do the research. But we also, let's not forget about when we absolutely devastated the S&P 500 in 2020. Let's not forget about when we obliterated the S&P 500 in 2019 either. Let's not forget about those times. And let's not forget about all the future years where I'm going to absolutely devastate the S&P 500 and absolutely devastate index funds. Because that will come and I will destroy it and I will outperform the market and that will be that. But even if I didn't outperform the market, I would still love to do this because it's what I like to do and I like to control wherever my money goes at the end of the day. I'm not just like a zombie that just wants to be like, I don't know what to do. Take my money, index funds. Take your cut of this. Take my money, Wall Street. I can't do this, but you got to hear it over and over. So you got to understand, in this sort of market, you're going to be brainwashed 3 core things right now. You're going to be constantly, as long as this market stays rough, you're going to be brainwashed 3 core things, okay? The first thing is negativity. I went on CNBC last night. Everything on the front page, all negative headlines, all bad stuff, all the Russia situation, all the market just fell, the NASDAQ was down 3% on Friday. Every single thing had a negative tone to it, and it was just bad, right? Negative everything. You're going to go online, you're going to see, oh, why the market's going to crash 50%, 80%, oh, why I sold all my stocks. You're going to see this constantly. You're going to get a bombard of this. As long as this market is weak, you're going to constantly just be bombarded with that stuff. And even when we flip and we start uptrending, let's say the Russell starts to uptrend, some of these stocks start coming together and things like that. Even when that happens, you're still going to be bombarded with negativity because they're not going to believe it's real essentially at that point. And so they're going to constantly bombard you with kind of negative stuff. Okay. That's the first thing. The second thing you're going to be bombarded with is, hey, you should be buying puts. You should be, going short on the Qs, as they say, right? Hey, short Kathy Woods fund. Everybody's piling into that right now, right? And my gosh, is that a dangerous move? That's all I have to say about that. The only way you can really win in that is if we do get an absolute, like a massive global recession like we did in 08, 09. The thing is, we've already been through the devastation in these stock prices. So now if you're talking about getting them lower than they are, you really have to have devastation in the overall economy and just complete devastation out there, okay? And if you have that, then certainly, you can get that once in every 10-year or once in every 20-year event where you can short stocks. And by the way, the folks that really made a lot of money, they already took advantage of that in 2020. People forget we had the fastest stock market crash in history. It didn't last very long, and so that's why people don't even register that one. But don't forget, we just had that. So you're going to be brainwashed to think like, oh, puts are the way, shorts are the play. And that's why you see so many people piling into put options right now. So many people piling into short selling stocks because they're looking and they're like, wait, the longs aren't making money. We're buying the dip, not really making anything right now. Or if anything, we're going down, we're losing money. So why not flip to the other side? Let's go ahead and go short. Or the other thing is obviously go cash, right? And so that's going to be kind of fed out to you over and over and over again as long as this market stays weak. And the third thing you're going to constantly have fed to you in a weak market is index funds, until the indexes actually start falling in major way. And then it kind of lay off of that a little bit because then it's like, oh boy, if the S&P all of a sudden is down 20% or something like that. But when the S&P's kind of held up because oil and gas stocks have held up and obviously, Apple, Microsoft and some of those stocks have held up in that sort of market, folks go ahead and they say, you got to be in the index funds. Put your money in the index funds and things like that. And also, you're going to be fed this right now is the rotation of money. They're going to try to get you into a lot more short-term trading in this sort of market right now. Hey, why aren't you rotating your money? Look at the oil and gas stocks. That's where the money's at right now. Look at all the Russia situation. Oil's going up. Rotate your money over to these stocks, right? And so you're going to be brainwashed this whole rotate your money over here. Oh, you do want to pick stocks? Well, then you need to learn how to rotate every 3 months, 6 months. That's a bunch of BS, man. At the end of the day, if there's great companies that you believe in over the next 5, 10 years, and they got great revenue profiles and you believe in their business models, you buy those stocks, you put them in the filing cabinet, they go down, you buy some more, you increase your ownership position over and over again. And as long as you're right about that business model, they're going to make a ton of money. I haven't ever been in a stock in which I was right about the business model and lost money. Never has happened. Okay. If I was wrong about the business model, then I end up losing money in that stock. Right. And so when it comes to me, like all these stocks have gone up because their business models are good, right? And they're, like I said, all those stocks are massively off 52-week highs, like massively. And, that's another thing you'll be fed out there right now is like, oh, see, that's why you should be trading more often because you could have sold Tesla at 1,200. You could have sold Revolve at 75 or whatever price, and 80. And, that's just kind of another thing that you're going to be fed out there right now. And do not prescribe to that notion, stay away from that. And if you love picking stocks and you love doing this stuff and you love putting in the research work, the thing is nowadays, all the tools are out there for you. You can listen to conference calls right through my app, The Hungry Bull, right? Or go to a company's investor relations page. All the investor presentations are there. The 10Qs are there. The 10Ks are there. The annual reports. Everything is there for you nowadays. We're in this, you can get news like in a snap of a finger. You don't have to wait like a month for it. Like it's never been easier to be somebody that is a stock picker and like to control your own money and put your money in stocks you believe in over the next 3, 5, 7 years. So do not prescribe to that notion. If you don't want to put in any work and you don't want to do this, then index funds are the way to go, right? And if you don't want to take any risk in index funds, then I guess you can put your money in a savings account, okay? And by the way, there's a huge risk with savings accounts as well, because guess what? There's something called inflation that constantly eats your money day by day, month by month, year by year, decade by decade. And, if you put your money in a savings account 10 years ago, your money's worth a whole lot less than it is today, basically. Okay, guys? So, why this market's weak, just understand you're going to be kind of, brainwashed to think certain things. Shorting of stocks is good. Put options are good. Index funds is good. You can't pick stocks. You're an idiot. You're going to be fed that constantly. And you're going to be constantly fed negative stuff in your face. And you're going to go onto the internet constantly. And you're just going to be negative stuff everywhere. And just understand, let me break out of this, okay? So anyways, guys, much love as always. Hope you enjoyed this. Don't forget to subscribe. Have a great day. Peace.